am Suhas Nagle. You are watching the channel Suhas Nagle Accountancy Classes. In this video, we will learn the topic accounting from incomplete records, which is also called as single entry system. Let's see how to solve the practical problem of single entry system. This topic included in the syllabus of FY Become Accounting and Finance and FY Become General Commerce. You can see the screen, and on screen question is ready. First we have to read the question. Mr. Aryan does not maintain his books on the double entry system and bank accounts. From the following information, prepare the final accounts as on 31st March 2025. Student, you can see prepare the final accounts as on 31st March 2025. It means we have to make the final accounts, but already you have learned in junior college make the final accounts as per the given trial balance. If trial balance is given in the question, it means complete record is available, and in this topic trial balance is not given, it means accounting from incomplete records. So according to the given information we have to make the final account. So let's read the question. We can say this is opening balance and these are closing balance. First item stock, creditors, debtors, premises, furniture, air conditioner into bracket credit purchase. It means amount to be paid. These are opening balance and these are closing balance. Opening balance it means previous year balance and closing balance it means current year balance. Other than opening balance and closing balance, transactions during the year are given in the question. First transaction, cash as on 1st April 2024, collection from customers, payment to creditors into bracket trade, it means regarding goods, rent rates and taxes, salaries, sundry expenses, sundry income, drawing by Mr. Aryan, loan from Mr. Thomas, capital introduce, cash sales, cash purchase, paid to creditors for air conditioner and bad debts written off. Other than this question, you can see answers are given as hints. So let's start the answer. In alternative Excel sheet, I have made the formats. You can see on screen. Books of Mr. Aryan, we have to make trading account, then profit and loss account for the year ended 31st March 2025, then balance sheet as on 31st March 2025. These are regular format of final accounts. Other than final accounts format, we have to make supporting ledger accounts. You can see on screen, cash account is required. Other than cash account, total debtors account for credit sales and total creditors account for credit purchase. Then statement of affairs should be open for opening capital. Statement of affairs we can say opening balance sheet, previous year balance sheet, amount of capital is not given in the question. So these are the formats, and after this format we can start our answer. Student, if trial balance is given in the question, we can make the final accounts, but if trial balance is not given in the question, then making the final accounts is challenging. So let's start how to solve the problem of single entry system. Opening stock 20,000, it means previous year unsold goods, and closing stock it means current year unsold goods. Same as per final accounts format, opening stock we have to record in trading account debit side. On screen, trading account debit side, I am typing in alternative Excel sheet opening stock. Amount 20,000. Opening stock, it means previous year closing stock. Already we have seen the format of opening balance sheet. It means previous year balance sheet, which is also called statement of affairs. So we have to record one effect in statement of affairs asset side. You can see on screen statement of affairs asset side, stock 20,000, closing stock second column 30,000. Same as per our final accounts format, closing stock should be recorded trading account credit side. Third last line, after closing stock, next item is creditors 32,000 opening creditors, 18,000 closing creditors. Opening creditors we have to record under opening balance sheet, previous year balance sheet. Opening creditors record to liability side 32,000. Then opening creditors write under total creditors account credit side opening balance. Bar balance brought down 32,000. Previous year amount to be paid. Then closing creditors 18,000. Closing creditors it means current year creditors. Total creditors account debit side closing balance to balance carried down 18,000. Now closing balance should be recorded under current year balance sheet, it means closing balance sheet. So next effect we can say final effect of closing creditors should be recorded current year balance sheet liability side. This is current year balance sheet. First item, first group capital. After capital we have to leave 5 to 6 lines and then write current liabilities and provisions. Under current liabilities and provisions, creditors and closing creditors write under closing balance sheet liability side. You can see 18,000. After creditors, next item debtors. First column it means opening debtors, previous year amount to be received, and second column closing debtors. Opening debtors should be recorded under opening balance sheet. Closing debtors should be recorded under closing balance sheet. Already I have told you opening balance it means previous year balance. Closing balance it means current year balance. Statement of affairs asset side after stock we have to write there debtors 1,20,000 and opening balance of debtors account should be recorded to debit side of debtors account, total debtors account. Debtors account debit side. To balance brought down 1,20,000. Then closing creditors 1,35,000 should be recorded under debtors account credit side second last line. Bar balance carried down 1,35,000 and final effect of closing balance should be recorded under current year balance sheet asset side under current assets and loans and advance. This is current year balance sheet. I am writing there properties instead of fixed assets. After properties we have to leave 5 to 6 lines and then write current assets and loans and advance. These are the groups of asset side. Under current assets we have to write debtors. In this problem no RDD, so we have to write the amount in outer column 1,35,000. Closing debtors, it means amount to be received against credit sales for current year. After the item debtors, next item premises, 75,000 opening value, 75,000 closing value. It means no change in the value of premises during the year. It means no addition or no deduction during the year. So premises right under statement of affairs. $75,000. No premises ledger account is not required, so we can write the final effect directly under current year balance sheet asset side under properties. As I told you, under properties we have to write premises. There is no any depreciation, no addition, so we can write directly in outer column. After premises, next item furniture. Student, opening balance is 15,000, closing balance is 20,000. Meaning of this difference in between two amount, which is additional furniture purchased during the year. So opening value we have to write under opening balance sheet, which is also called statement of affairs, and closing value should be recorded under closing balance sheet. Statement of affairs asset side under assets category. Next item is furniture. $15,000. And furniture ledger account is not required. We can open, but all ledger accounts are not required. So we can write directly in current year balance sheet asset side. This is current year balance sheet asset side under properties. Next item furniture, and already I have told you there is addition during the year. So opening value of furniture right under inner column, and closing value 20,000. It means we have to write there add addition during the year, additional furniture purchased during the year 5,000. Outer column 20,000. After furniture, next item is air conditioner. Into bracket credit purchase. Already we have read air conditioner purchase on credit 12,000. Opening value 12,000. Opening value should be recorded under statement of affairs. Statement of affairs asset side after furniture, right? Air conditioner 12,000. This is opening value of air conditioner. Closing value of air conditioner should be recorded under closing balance sheet. Amount 12,000. After air conditioner, we have to start the process on transactions during the year. First transaction is cash as on 1st April 2024, 25,000. This is the opening value of cash account. We can say cash available at the beginning, rupees 25,000. Cash account, ledger account is available. So cash ledger account, asset category item, debit balance, right debit side, to balance brought down. Here, to balance brought down. And opening balance, it means previous year value or previous year cash available. So write another effect under statement of affairs. Cash in hand 25,000. Previous year cash in hand 25,000. Next item, collection from customer 1,40,000. Transaction collection from customer, journal entry, cash account debit to debtors. So according to journal entry, we have to complete the ledger posting. Which is also called collection against credit sales during the year. $1,40,000. And cash account is there, so we have to record the second effect. Basic theme of this topic is single entry system we have to convert into double entry system and make the final accounts. So first effect we have recorded under total debtors account credit side 1,40,000. Second effect, cash account debit side, two debtors. After debtors, next transaction is payment to creditors into bracket trade. It means amount paid to creditors against credit purchase during the year 1,24,000. Journal entry, creditors account debit to cash. So same as per previous transaction, we have to record the both effect. We can write cash account credit side by creditors into bracket trade. There are two types of creditors, air conditioner purchase on credit, and this one regular goods are purchased on credit, and this is the payment. $1,24,000. This is first effect. Second effect, creditors account debit side. $1,24,000. Next transaction is rent, rates and taxes rupees 5,000. Journal entry of expenses paid. Expenses account debit to cash. It means rent, rates and taxes account debit to cash. There is only single ledger account is available, which is cash account. So cash account credit side by rent, rates and taxes. There is no rent, rates and taxes ledger account. Here we have to assume rent, rates and taxes ledger account is available, and we have recorded the second effect. It means to cash, and then close the rent, rates and taxes ledger account. Then final effect should be recorded under profit and loss account debit side, P&L account debit side to rent, rates and taxes. Profit and loss account debit side, always leave first line for gross loss, and we have to write under second line to rent, rates and taxes. $5,000. Here very important thing is we have to assume rent, rates and taxes ledger account is available. We have recorded the second effect, then we have close the rent, rates and taxes ledger account, then final effect goes to profit and loss account. Remember, this is final effect, not a second effect. Next item is salaries. Same treatment, salaries account debit to cash. It means salary paid during the year. Journal entry, salary account debit to cash. Ledger posting, cash account credit side by salaries. And after this, salaries ledger account is not available. We can open but not required. And again we have to assume, suppose salary ledger account is available, we have recorded the second effect, then close that ledger account, then final effect goes to final accounts. It means profit and loss account debit side. So after rent, right here salaries, $80,000. After salaries, next item is sundry expenses 12,000. Again expenses item. So same journal entry, sundry expenses account debit to cash, same treatment, cash account credit side by sundry expenses. And same as per salaries and rent, sundry expenses, suppose we have opened the ledger account, then close that ledger account, then final effect goes to in final accounts under profit and loss account debit side, right here to sundry expenses. Next item, sundry income rupees 25,000. Journal entry of sundry income is cash account debit to sundry income. So ledger posting, cash account is there, cash account debit side to sundry income. Again, sundry income ledger account is not available. So we have to assume, suppose sundry income ledger account is available, then recorded the second effect of cash, then close that sundry income ledger account, then final effect goes to in final accounts under profit and loss account credit side. Leave first line for gross profit right here. Sundry income 25,000. Next item, drawing by Mr. Aryan rupees 10,000. Journal entry, drawings account debit to cash. Drawings it means personal expenses to cash, it means we have to record the first effect cash account credit side by drawing. $10,000. Again, we have to assume drawing account is open, then record the second effect, then final effect of drawing ledger account goes to balance sheet, liability side should be subtract from the capital. Capital amount is missing, we have to write after capital. Inner column 10,000. After drawing, next item, loan from Mr. Thomas 40,000. Loan taken by Mr. Aryan from Thomas. Journal entry, cash account debit to loan. Cash ledger account is available, so ledger posting, cash account debit side to loan from Thomas. $40,000. Next item, capital introduced. It means additional capital introduced during the year in the business 20,000. Journal entry, cash account debit to capital. Cash account is there, so we have to record the first effect of cash account debit side to capital. We can write there capital introduce 20,000. Capital ledger account we can open, but capital ledger account is not required. Again we have to assume, suppose capital ledger account is available and record the second effect, then close that capital ledger account, then final effect goes to in current year balance sheet liability side. After less drawing, we have to write next line, add, addition It means additional capital introduced during the year. $20,000. Next item, cash sales 50,000. Journal entry, cash account debit to sales. Cash ledger account is available, cash account debit side to sales. Sales ledger account is not available. Here we have to assume, if suppose sales ledger account is open, then record the second effect of this transaction, then final effect after then we have to close that sales ledger account, and final effect goes to in final account, trading account credit side. So trading account credit side, buy sales, and this is cash sales. So write next line, cash for cash sales, amount inner column 50,000. Next item is cash purchase 10,000. Journal entry of cash purchase is purchase account debit to cash. Again, cash account is available, purchase account is not available. So we have to record the first effect, cash account credit side, by purchase. $10,000. After purchase ledger posting, again we have to assume purchase ledger account is open, then record the second effect, then close that ledger account, then final effect goes to trading account debit side. Right here, to purchase, under purchase write cash for cash purchase, and that amount write in inner column 10,000. After cash purchase, next item is paid to creditors for air conditioner rupees 12,000. Student, as above mentioned in the problem, air conditioner purchase on credit. Now payment of air conditioner rupees 12,000. Journal entry is creditors account debit to cash. Air conditioner is an asset, and asset purchase on credit is also creditors. So ledger posting is creditors account debit side to cash, right into bracket, AC for air conditioner, and yes, cash account is there, so we have to record the second effect. Both ledger accounts are available, total creditors account and cash account. So we can record the second effect, cash account credit side, by creditors into bracket AC. The first item of cash account 1,24,000. These are creditors for goods and these creditors for air conditioner rupees 12,000. Next transaction, bad debts written off. This one last transaction, bad debts written off. This is not a cash transaction. This is non-cash transaction. Journal entry, bad debts account debit to debtors. Debtors account is there, so we have to record the ledger effect. Debtors account credit side, by bad debts rupees 1,000. Again, bad debts ledger account is not available, not given. We have to assume, suppose we have opened the bad debts ledger account, then close that ledger account, then finally if it goes to profit and loss account debit side. P&L account debit side, it means expenses and losses. Two bad debts. This is the final effect. Student, maybe one doubt in your mind, bad debt should be subtract from balance sheet asset side from Don't subtract bad debts from debtors because of in this problem closing debtors are given. If closing debtors are not given in the question, then bad debts should be subtract from the debtors. Why should not be subtract from the debtors? Because of these bad debts already subtract from the closing debtors. All transactions are over. After this, we have to close the supporting ledger accounts, including statement of affairs. Then we can close the final accounts. First, we have to close the first ledger account, which is cash account. Before closing the cash account, we have to record the effect of furniture purchase during the year rupees 5000. Journal entry furniture account debit to cash. This effect we have to record under cash account credit side. Write only 5000, which is the difference in between opening balance and closing value of the furniture. After this, we can close the cash account. Debit side total is 3 lakh. Credit side total is 2 lakh 58,000. So difference comes to credit side by balance carried down as shown by red color. 3 lakh minus 2 lakh 58,000. So cash at the end available 42,000. This is closing value of cash. We have made the cash account to find the value 42,000. It means the cash at the end. So final effect goes to current year balance sheet asset side. Right after debtors, cash in hand 42,000. Closing balance should be recorded under closing balance sheet. Then next supporting ledger account should be closed total debtors account. Debit side total 1,20,000. Credit side total 2,76,000. It means balancing figure 2,76,000 minus 1,20,000, which is credit sales 1,56,000. Credit sales journal entry debtors account debit to sales. Amount of credit sales was missing and this is the amount of credit sales 1,56,000. Again here we have to assume suppose sales ledger account is available, then record the second effect, then close the sales ledger account, then final effect goes to trading account credit side. $1,56,000, and now we can take total of total sales 50,000 plus 1,56,000. Total sales 2,06,000. After total debtors account, now we have to close the total creditors account. You can see total creditors account debit side 1,54,000, credit side 32,000. So balancing figure 1,54,000 minus 32,000, 1,22,000, which are purchase, credit purchase. I am writing there into bracket credit for credit purchase. Again we have to assume purchase ledger account is not available. Suppose we have open, then record the second effect, then close the purchase ledger account, then final effect goes to trading account debit side. Same as per final accounts format. Right here credit for credit purchase 1,22,000 and write in outer column $1,32,000. After this, we have to close the statement of affairs, which is opening balance sheet First take total of the liability side. Liability side total 32,000. Asset side total 2,67,000, and balancing figure of this statement of affairs 2,67,000 minus 32,000. 2,35,000, this is opening capital, it means previous year capital. So write there capital, this is balancing figure shown by red color 2,35,000, and this opening capital we have to write under current year balance sheet liability side 2,35,000. Right here 2,35,000. Now opening value of capital is available, all missing figures are available. Now we can close the trading account, then profit and loss account and balance sheet. Already I have told you we have to follow the format of final accounts, but trial balance is not given in the question. This is called accounting from incomplete records. I am closing the trading account. I am taking first debit side total 1,32,000, credit side total 2,36,000. Credit side total is more than debit side total, it means there is gross profit. So I am writing there to gross profit 2,36,000 minus 1,52,000, 84,000 gross profit, and record the second effect by gross profit 84,000. Then close the gross profit and check whether net profit or net loss. Debit side total 98,000 total expenses and losses. Credit side total 1,09,000. So there is net profit 1,09,000 minus 98,000, 11,000 to net profit, and give the final effect of net profit to the balance sheet. Add net profit, $11,000. Then take subtotal of capital 2,35,000 plus minus 10,000 plus 10,000 20,000 plus 10,000. So total closing capital 2,56,000. Loan from Thomas should be recorded here after capital. Loan from Thomas. Already we have recorded in cash account, and loan account is not available. Suppose we have open, then close, then final effect goes to balance sheet liability side. Now all items of the balance sheets are recorded. You can check capital group, then loan from Thomas 40,000, current liabilities and provisions, then properties, these are properties, current assets and loans and advance, and now we can take the total of the balance sheet 3,14,000 and 3,14,000. Student, you can see the balance sheet is tally. We can check our answers. Gross profit 84,000, net profit 11,000, and balance sheet total is 3,14,000. You can see balance sheet total is 3,14,000. So this is the single entry system problem. I hope you have understood this lecture and you can solve the problem of single entry system. These problems are complicated because of trial balance is not available, so and these problems are challenging. Make practice and you can solve this question. Dear student, if you like this video, then click on like button, then share this video with your friends and subscribe my channel for this kind of more videos. keep learning accountancy with me. Thanks for watching.